The Internal Revenue Service stated that this tax season could be a frustrating one. So in this video, I'll quickly share what the IRS Commissioner said so that you can be prepared. And then also I'll share a few ways and a few things you can do now in order to save on your last year's taxes. Welcome back, or if I haven't met you yet, I'm Dave Zoller and I run Streamline Financial. It's a retirement planning firm with Tim and Luke and Sean. So the IRS Commissioner, Chuck Reddick, said this tax season may be a frustrating one as they deal with a lot of backlogs of returns and personnel shortages, and then more taxpayer phone calls than normal. And also he said, quote, "We're unable to provide the level of service and enforcement that our citizens and tax system deserve and require in many places," end quote. So what does that mean for us? Well, it's going to be longer than normal hold times and then longer than normal response rates, most likely. When it comes to sending out refund payments to you, the estimate is going to be about 3 weeks is what they said. So individual tax returns for 2021 will be accepted on January 24th, and then the end filing date is April 18th for most taxpayers. Now, on to some things that can actually lower last year's taxes if you're thinking about that right now. The first is, if you have one and you're eligible, you may be able to contribute to the health savings account for last year. So that'll actually lower your adjustable gross income, which will lower your taxable income as well. Another thing, if eligible, is contributing to your deductible retirement accounts like your IRAs or SEP IRAs. And there's some income limits, so it's important to make sure that you're eligible for those. Another thing you can do is see if itemizing your deductions is worth it, which it might be worth it if you can add up your qualified expenses and they add up to more than 2021 standard deduction of $12,550 for most single people, and then also the standard deduction of $25,100 for most married couples who file jointly. Many deductions are well-known, things like mortgage interest or charitable deductions, but you can also deduct a portion of medical expenses that exceed 7.5% of your adjusted gross income for 2021. Lastly, if you made any extra income on the side last year, or if you're considered self-employed, you may be able to claim a home office deduction, which means that you may be able to write off expenses that are associated with a portion of your home when you exclusively conduct business in that portion of your home, such as things, possible write-off potential is rent or utilities or insurance or housekeeping. So the percentage of these costs that could be deductible is based on the square footage of that home office to the total area of your house. So there are some specific rules around home office deductions. So I'd recommend talking to an accountant or a CPA before deciding to see if it makes sense for you. So I hope that this tax season is not a frustrating one for you. I really hope that it's a breeze. So have a great rest of your day, and then I'll see you in the next video. Take care.